Hello and welcome everybody to our webcast. It's great to be back with you within this webcast where we look at ways to generate potential income selling options. That is covered calls and short puts. I look forward to going through that with you today. Taking a quick look at the chat, I recognize a lot of different names here and always appreciate your comments and questions into the chat. There are also plenty of new names. So do me a favor, if you're new, let us know into the chat. Love to welcome you on board. Want to also say that many of you that are new may not be familiar with our channel. So just wanted to quickly mention to you, you may have already seen it today if you've been joining many of our classes, but you can join. We'd love to have you on board. We've got several thousand individuals that follow us here on Trader Talks. There should just be a subscribe button over here, right over here under the right-hand side. Be sure and click on that. By the way, a real easy way to join too. Bottom right-hand corner of the screen. Just click on that subscribe button. Love to have you on board. Okay, with that, let's go ahead and minimize that back down. Want to also mention that I'm joined in the chat by my good friend and manager, no less, Scott Thompson, who's very experienced with options and used to teach a number of these classes. So I want to thank Scott for being on board. It's great to have him on board with us today, and look forward to it. All right, folks. Within this class today, our topic, we're going to really talk about finding short puts with just one simple moving average. So easy, so basic to do. But this moving average, along with, amongst, I should say, a number of different other indications, which we'll look at, can really be informative in terms of letting us know when the right time to maybe look for short puts could be. Generally, you get a cross above that moving average. So I'll look forward to going through that with each of you today as we dive on into this. But let's start off first with some disclosure items to get the show on the road. All right. So as it does state here, options carry a high level of risk. They're not suitable for all investors. The information here is for general information purposes only. Should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Now, with that, investing does involve risk, including the loss of principal. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a higher risk of being assigned early. Now, the paper money software application is for educational purposes only as well. Okay, we skipped one there. There we go. A quick note too, in case we do get into it, rolling strategies can entail additional transaction costs, including multiple contract fees, which may impact any potential return. All right, I think we're all set and good to go on this. All right, let's do it. Let's dive on into it. Let's start off first with our general market. We can go into detail on the market, as we look at the market here. In fact, I'll go full screen as we look at this. A couple things to point out on the market here. It's really kind of straightforward, isn't it? And obvious, folks. Look at that right there. Well, that is an all-time high. Now, if I go over to the NDX, you're going to see the same thing. And you're going to see, if we look at the Dow, let's see, $DJI. Okay, that was yesterday. Oh, I should say Friday. So we did get a high there on the Dow as well. But all-time highs, SPX, NASDAQ, really straightforward. Folks, it's hard to argue with the strength of a trend when you're seeing that. And it does bode well, and it kind of sits nicely with our discussion today on selling puts to generate potential income. What we're looking at there is, a strong move, because remember on the short puts I should say with short puts, we're looking to neutral to bullish type scenarios specifically. So in other words, the price of the stock can go, like maybe the market's doing, the stock can go up, it can go sideways, it could even go down a little bit. And what we're really trying to do is collect our maximum gain by selling that short put, and over time potentially collecting income over that time frame that we've sold on that contract month that we've chosen. So that's three directions that a price of a stock could go, and we could still capture our max gain. That's what can make selling options, namely specifically short puts, I would say interesting and really attractive to a lot of traders, investors. But there is that neutral aspect. And one thing we'll say is when the market is showing strength, a lot of times, we are looking up here at the S&P 500. When there's that many companies going up and breaking into all-time highs, we have to say that well, there could be a number of stocks that are doing something very similar or on the verge of moving higher. So that's what I wanted to talk about specifically today as we dive on into this. So let's do this. Let's get started. So again, welcome all of you. Great to have you in the chat. Any questions, comments? Throw those in. But I wanted to start off first with looking at a company that might sit where we might have an expectation, I should say, for an upward move or a sideways move, and that would be Palo Alto Networks. That is PANW or PANW. You can see over here on the chart. Now, folks, when you see this chart, you might resonate with it a little bit. There are a couple of different things that we're seeing with it. And much like the S&P 500 index or the NASDAQ 100, the trend is clearly to the upside, right? The trend has been going up, higher highs and higher lows. And with that, we see what may be a price pattern within here too. Some of them a little bit longer, some of them a little bit shorter, but here you go. Look at this. You've got flag patterns through here. Now, what a flag pattern represents is really kind of a different type of trend, but it kind of represents the strength of the trend. You're seeing an outsized move to the upside and a more mild corrective move to the downside. This particular stock is past earnings. So I chose that for a reason because, yes, you can have volatile moves around earnings for sure, but we are past earnings at this point in time right now. All right, so you can see that upward trajectory right there. Now, a couple of things to look at. Say, for example, let's go through and let's really explain in detail how that short put works. And let's just say, for example, we chose an area on the chart that is below the current price of the stock so that we could account for this. The price could go up, it could go sideways over a range, right over a time frame. It could go sideways, and it could even go down a little bit. But if we were to sell a put below the price of the stock, somewhere over here at a strike price in this range, well, then the stock itself could go in three directions, and we're just, very likely to just collect our max gain over that time frame as the option expires over that contract month. Okay, that's kind of appealing, right? When we're normally buying stock, and sometimes you see a short put, I should say a bull flag, where you just say, gosh, I think it's strong enough where I just want to own the stock. But if you thought that it could go neutral, and you wanted to account for that, a short put could really fit in line nicely relative to just buying a stock outright. Because, for example, if we bought a stock outright, what direction must the stock go in order for us to generate a return? A capital gain in that case, not necessarily income, but a gain, capital gain. Well, I would say you've got to buy low and you've got to sell high. You've got to add down here and subtract down here. And folks, that would be one direction. Whereas we mentioned up here, there are actually three directions that stock can go. Up as much as it wants, sideways, or down a bit. But if it holds above that strike price by expiration, well then, we can collect an income off that potentially, right? That's the whole idea, collecting that potential income. Now, we need to bring this up right now, and I want to do this up front because, and I'll just use red as an example. If we go below the strike price by expiration, that is very, very likely that we're going to be assigned shares of stock, okay? And that means that, as we're talking about standard equity options contracts, for every one short put option, I'll just go 1 minus P, short put contract that we sell, that is equivalent to 100 shares of stock. It's very likely that if the price of the stock goes below the strike price by expiration, that we'll be owning shares of stock, 100 of those for every one contract we sell. If it was 2 contracts we sold, well then, yes, it would be 200 shares. All else equal, if we don't touch that contract, if the option market's open and we don't try to trade out of that, close the trade, we'd be looking at owning that stock. But of course, there can be trade management that comes in. If prices are going lower and we do not want to be assigned shares of stock and we are approaching our expiration date, well, then we might want to try to buy that short put back at the ask price and cancel it out so that we're not, necessarily on the hook. We did mention earlier in the disclosure that a short option can be assigned at any time, but substantially more likely, after expiration or right at near expiration when you're below the strike price. Okay, so wanted to point that out. That's a component. By the way, some traders will look and investors will look to just buy a stock this way. and get paid the premium to do so. Because I want to point this out, you still get to keep the premium upon assignment. So if the price of the stock were to go below our strike price by expiration, well, we still get to keep the premium, and that can lower our total cost of the transaction too, right? Because we'll be buying shares of stock, likely. All right. So there we go. There we go. So let's talk about this a bit more. And let's go to the trade tab. Let's make this, before I actually do that, I want to let you guys know I did send out a tweet. Yes, it was just for you guys. I sent it right out here. And by the way, I sent this out because, let me update it real quick. There we go. Like I said, I just sent it out, but it is a cheat sheet of chart patterns. Now you'll find in here that you're going to get the flag pattern in there, but a lot of these chart patterns, they are in line with the trend and they can be useful. Some of them are to the downside, of course, but just be mindful of that. But this can be helpful as you guys are learning those flag patterns. What I'm going to do is I'm going to post this X link right into the chat box, so you've got it. Feel free to follow me if you want to take a look at that, but love to have you on board if you're not already. Okay, now let's get going on this. So let's take a look now. So the key point next is, what strike price are we going to look at to sell this short put at? Now, I have intentionally put a line right here. You can see my crosshairs are just lined up right there. What do you see at that level? A couple of things. First off, if we're looking for the price of the stock to hold above a strike price by expiration, which we are, we're selling a put. Do you think support levels could be interesting? Maybe support levels could, if you're looking at a support level, let's say there's a support level on a stock, on a chart, maybe it could help to hold above that level and keep us, let's say if we were selling a put down here, above that point. So I'm going to factor that in right now because we did get a very interesting breakout on Palo Alto here. Let's clear this off. I'm going to just draw this through. And where are you guys seeing? Anybody seeing a support level here as I take a look at that? Just going to check one thing here as I do that. All right, let's do this. How about right here? Oh, let's just do one thing here. Cool. Just take a look at the chat, see how we're doing there. Excellent. Let's do this right here. I'm going to go ahead and just draw a line right through there. And you guys tell me, are there previous highs there? 1, 2, ooh, a gap up right there as well. And where did we hold on our pullback? Right there. I would call that, maybe the 380 strike. There does seem to be a fair amount of support at 380. With that, let's come down here and take a look at this. There is a stock split. And what can happen on the stock splits can happen, and some traders will look to trade this, is about a month before the stock split is what a lot of traders will say. This is one approach, okay? They'll say that the price of the stock generally is more bullish a month ahead of the actual strike. Now, does that always happen? Of course not. But I just wanted to point that out because that's not something you see every day, and it is down there, and that possibly could, will it, account for a move to the upside? Because remember, all we need is for the price of the stock, generally speaking, right, just to hold above the 380, like we said, in the vast majority of cases, just to collect our premium there. Okay, so you've got a couple of different things in line there, taking a look at. All right, so let's do this. I'm going to go to the trade tab. Let's do that right over here so we can look at a potential trade. And a quick note, we got a lot of different option contracts here. What I'm going to do is I'm going to point out here that generally traders will look to kind of look at a time frame to kind of balance out risk and the potential premium they can receive about 20 to 50 days out in time. And you can get those days right over here on the left-hand side of the screen. In fact, these are your expiration days left to expiration. And you can see you've got your weekly contracts and the time frame on those weeklies. Here's a monthly contract right there. By the way, that monthly contract for Jan is right there at 46 days, and that fits nicely into our range right there. Let's go ahead and just take a look at that one for now. So I'm going to pull this up right here. Here's our Jan. We've got 20 strikes up right now, and we're going to be looking at to sell puts over here. I know many of you are new, so I'm just going to highlight some of these key points quickly. It's one on the right-hand side of our options chain, which is under our trade tab, right? We've got our symbol in and everything ready to go. So we sell puts on the bid. And so we're looking to potentially collect income down over here on this side. And there is that 380 right there. There it is, sticking right out. Now, there is the spread between the bid and the ask price. A lot of times traders, investors will look for a spread that's fairly tight. In fact, the tighter the better, because we talked about one of those scenarios before. We're trying to close it out if we didn't want to get assigned shares and the price stock had been dropping. Sometimes traders will try to close this out early, and you don't want that spread to be too wide, right? Some things that can help to create a bigger spread, generally, I should say a tighter spread, would be volume on the stock. Over 1 million shares traded a day is what a lot of traders will look at, because it can help to give you a good spread here on such an expensive stock. Okay. In addition, the open interest column that I have over here, and I've just kind of customized this to take a look at it, but we're in the four figures, we're in the thousands. And a lot of times traders will look at least in the hundreds range, the 3-digit range. We're in the 4-digit range here. And so that could be accounting, could help to account for this tighter spread that we're seeing right here. Okay. Another quick point I wanted to highlight too is the delta. This is one of the option Greeks. The delta, and by the way, the delta is measured, the delta itself interacts with the price of the option based upon a $1 increase in the underlying stock. So for every $1 increase, the stock goes higher. The option here will go up or down by the amount of the delta. And you can see that delta right there. So if the stock goes up $1, this range here will likely move down, because it's a minus 35 cents. And the whole goal here, think about that. That's an upside move. And we said if we move higher or stay flat over a range, it could influence us, in receiving our max gain at expiration, or definitely bringing in income into that transaction. Okay, so we've got that down, and I wanted to highlight that right now there for you. So let's look at that level right there. I'm going to go ahead and just show you. That was our 380. So this delta range, a lot of times traders, investors will look for a 0.2 to a 0.4. And the reason why they'll do that is this is also an estimation of kind of the percentage of the price of the stock going below that 380 level. Right now, it says there's about a 35%. So that could be something also that could work in our favor. But you see that? That's another read on delta. So between 40 and 60. In fact, by the way, that's really the first one we would look at right there. We got a couple more. There is the 370. Some could look at the 370, a little bit lower. You certainly have some good open interest there as well. But let's just take a look at that right now. So let's click on that 380. And I'm going to pull this up right now, and I'm just going to show you what this looks like. Now, I'm just going to put this in here. I'm going to try to get just a little bit more on this. I'm going to go with a 915. Why not? I raised it up a little bit. So that is $915. It's not really a cheap stock here. It's in the 390 range right now. But that is the amount we could potentially try to collect here. We're selling that one contract. Let's go ahead and click on confirm one time before we send through and take a look at this right now. Okay, so with this, we can look at this and say our max profit is that amount. It's $915. Now you say, Mike, but my goodness, it's also 37,000 on the max loss. But remember, folks, this accounts for the stock being assigned and going to zero. So let's say there is an assignment and we own shares. We have got to buy 100 shares of stock, let's say, for example. And then this stock goes all the way from 390 to zero. That's what that represents. Basically goes bankrupt here. And so just park that in the back of your mind, because that's where that number's coming from. Now, last thing I'll note is the margin requirement there to put this trade on is a little bit pricey, but you're going to see that. I thought this is a good example, because you are going to see that with these higher price stocks. But this is what we're looking at. So over that range of time, if we're holding above the strike price, our anticipation is to collect that $915. It's not a small amount, is it? It's a fairly larger amount, but I'm going to go ahead and send it through right now, and we will add this, and there's our fill right there, into our paper money account. Now, I'm going to tell you guys something about the option wheel. I want to throw this in here and explain just a quick note for the option wheel. The option wheel is when you can then do covered calls tied into the short put. What did I just mention with that short put? There could be the potential for assignment, right? Price of the stock could go, but let's say it goes under that 380 right there. And let's say we want to own shares of stock, but we want to also keep the generation of income coming through. So now, boom, we're owners. Let's just fast forward. We're over here in the future. We don't even, we don't have it over that far. The calendar doesn't go that far, but let's just say option expiration is here. We get assigned, and now we are proud owners at a fairly high price of this stock. Now we got to keep the premium, right, on the put side. So over here, I'm going to say the short put, put an S in front of it, the short put, let's just say we got assigned, but we got to keep a premium here. Okay. Now we own 100 shares of stock. Anytime you have 100 shares of stock, you can then sell a call option in this case against it to generate potential additional income. Now, how would that work? Let me switch up the colors here real quick just to highlight this. Let's say the price of stock hits 38, just by some reason it goes under 380, I should say 380, and then it pops up and starts to move higher, and we say, great, well, I'm going to sell a call up here at a little bit higher price. And I'm now going to kind of spin that option wheel. I'm over here. I had a short put. And what did that short put do? That short put, upon assignment, this is actually, remember, if it goes against us, if it goes down and we get assigned, for example, we have 100 shares. And now what we're going to try to do is, in this case, not SP, but SC, sell a call. We sell a put, we generate income. Now we sell a call, and what are we doing? We are creating a wheel. If the price of the stock holds below the strike price up here by expiration, then we're just likely, let's say it holds below here, then we're just likely to collect that premium over that time frame, that call premium. If it breaks up higher, well, good news is we own 100 shares of stock, and we're gaining on that dollar for dollar for dollar, all the way up to that 420 level. So that's a gain. Let's see if we were at 380 to 420. There's 30 points right there. We had 100 shares. Well, we're looking at $3,000, for example, is in our paper money example. And then plus, if it goes above there by expiration, we get called away our shares. So we have to give up our stock. That's the side of the short, the covered call. At this point, we have to give that up, but then we also get to collect our short call, the premium from the short call too. So this is referred to as the option wheel. Now, if this happens again, I'll just draw a blue line going over here, because let's say, for example, we get our shares taken away on the short call. So we're minus 100, we're back to flat again. Well, then we could, if we wanted to, if we like the structure of this trend, we could just come right back here and start again with selling a put. And this is referred to as the option wheel. But I thought it'd be kind of cool for you guys to see both of these today, to see a short put plus a covered call. This is referred to as the option wheel. I have some additional short puts I wanted to show you all today, but I want to throw that covered call in there too, because that's part of our class, and we will talk about these each and every week. In fact, the last, I want to say 2 weeks, we just talked about covered calls. All right. By the way, I'm just going to throw that in there because that short call with the 100, yeah, that's referred to as, so when we put the short call on, we created the covered COV for short call trade. We created a covered call right there. Okay. All right. So those are the two ways. And so you can kind of see, one of them does require stock. That's the covered call, requires that 100 shares. The other one doesn't require that. You can just start off and try to generate income without owning the underlying shares of stock. Okay. All right. Let's see. Got a couple dollar signs in that. Yes, there you go. All right. So another example, I want to throw this out there specifically for you guys. Now, sometimes you'll see a stock like this, NWS, and you say, wow, okay. Look at this. We broke above a long-term range. What have we been talking about, folks? We said, breakouts can be interesting. Some of those price patterns that I just shared with you, those can be interesting too, no doubt about it. But also the flag patterns. Do you see this earnings announcement right there? Now, the market appears to have interpreted that positively. There was a gap higher. I'm going to put a gap in there showing strength. And now we may, in fact, have a flag pattern again, which we say a lot of traders, investors will look at that because oftentimes it can be an indication of a continuation of the trend is why they look at it. Here's the strong upward move, a very, very mild pullback here There's the flag, right? Now, will it unfold as a flag and go to the upside? That's the question. But it's another pattern that might be a little bit, it's kind of recognizable, right? Relative, and you'll see that on the cheat sheets that I sent out in my X handle. Definitely take a look at that. But also, it's a pattern that traders might look at just to own shares of stock if, in fact, there's not a market for the options. Look over here with me. Look at this. We try to go over here and we say, oh, this is fantastic. It's a smaller price stock. But you scoot on over here and you say, well, where's my bid and ask? I mean, I'm not getting anything under here. I mean, the 35 has this really wide spread, but look at the rest of these. I mean, the 30 there's nothing on the bid. Folks, it really doesn't work as an option because they're not giving us anything to even sell it. And to buy it back, there's a spread, relative to zero there. So it's very, very challenging to have this. But I just want to say sometimes you're going to run into this. Even though this stock is in the S&P 500, it does not have a market for it. We're not over 1 million shares. And by the way, there might have been one poor soul. We don't know what's going on over there, but looks like there is open interest. We don't know the situation there, but you've got just one contract off a couple of these, one up top, one down below. So keep that in mind. Some of these, as I mentioned, traders will just look at these for stock trades, but it's got to have that option component. It's got to have a spread that makes sense to us to generate that potential income off it as well. Okay, cool. Let's go to our next couple. Now, I am going to throw out a poll in here because I want you guys to help me select which one of these is next. So keep an eye on these. The reason is they're both in the same group. Here is BKR. So here's Baker Hughes. Oh, looking familiar? Well, there is a gap up. We're post earnings, kind of a flag trade, really kind of holding its gains. It'd be positive for an upward move higher. And you can see the strength there. What's the direction of the trend, folks, as you look at this? Trend is higher highs, higher lows. You've got a 52-week new high right there. If we look at the trade tab, we can see that it's over 1 million shares. You've got a really outstanding spread in here, looking at our Januaries on the put side here. Really a 5-cent spread, a dime, all the way down. And the open interest is getting there, but I mean, it's got a lot of good volume, and you can just see right here, it's probably a fairly new contract, as you can see. Not a lot of volume traded on this yet. It could be a fairly new contract coming out, but the spread is very, very good. And we can see that right there. Now, having said that, let's go ahead and just compare this with another stock. And the next one I want you to look at is still in the oil services group. Now, it does have something interesting here. It has taken out its long-term downward sloping line. Some traders, investors do like to see stocks that have gone down for a while, but then have begun to break a trend line, which can be a preceding indication of a change in trend. In other words, you could get a higher high and a higher low afterwards. And you can see down here, this is in fact a higher low. And technically, I mean, we are getting higher lows here. We took out that long downward sloping trend line, drawing off the bodies of these candles here. And, we're seeing some strength within this industry. And could it be positioned here for the possibility of a breakout higher? All right, let's just take a quick peek over here. There we go. Spread, penny increment. It's a penny increment option. You can see you can change those in pennies. And over here, it's got 4 million shares traded, a lot more open interest, but the spreads are actually, they're really quite similar. I mean, that's actually, what a 3-cent spread or so versus a 5 that we saw previously. So I want you guys to think about which one of these you'd prefer. Now, what are some of the key factors? SLB, Schlumberger, has more open interest. It's a tighter spread. But if you compare the spreads, it's kind of similar to Baker Hughes. I will say this, Schlumberger did take out his downward sloping trend, but what's the direction of the trend here? And how do you feel about that trend? Let me put this, I'm just going to post a quick question. And if you could participate, I would love that, especially we've got some great numbers in this class right now. And first one was BKR, and the second one is SLB. Let me throw that in right now. just stating, please select between these two stocks. I'll let you guys decide on a percentage basis which one we're going to choose, but those are some things to keep in mind because this might be a process that each of you go through as you look and try to say, well, gosh, they're in the same group. I don't, doubling up on one is kind of like doing just, it's just exposure across the whole group. Or doing two of those is kind of like doubling up on the whole group. So maybe you go through that selection process. So important to kind of break down a few of these things. Both of them, by the way, let's do it again. Post earnings, another thing to think about. Post earnings. BKR substantially higher on that upward trend, but think about this. Downward sloping move. What if you're okay? Let's say you were to sell down here and you do get assigned, we sell a put, price the stock goes below that strike price by expiration. Well, we get assigned 100 shares of stock there. Maybe you like to buy low and try to sell high, right? So that's another component. Okay, let's go ahead and finish that off right now. SLB is holding firm, although the numbers are slipping. If I wait too long, the numbers will slip all the way back down and we'll have a different one. Awesome. 178 votes. Thank you, folks, for voting on that. And this happens a lot. It's so interesting. You get a third with BKR and 2/3 with SLB. So the 2/3 have it. We're going to go with SLB on the downward move that with the trend line break and a better open interest, right? Just clearly better open interest here. And also with that, you can see over here, we've just taken out this level, and this is a higher, when you get those higher lows, sometimes that puts you in a better position to get that trend as well. So cool. First thing is, let's look at support. Let's see what's on the chart and try to really confirm that initially. So looking at the chart, where might we see that support, those support levels at? In fact, if I just look over here, you can see that, okay, so we didn't quite get down to these levels here so there is some support around 43-ish. See how I'm pointing at these support levels and just kind of looking over here. Quite a bit is at 43, but let's see how the delta lines up too as we look at maybe a 42. Why would 42 be interesting? Look where the gap up occurred. You gapped up right to 42 right there. There was a little bit of support through there too. There was a little bit of a gap right there as well. And then you got support, you held, possibly support. That's an S, by the way. Sorry. S. Possibly support near that 42. Let's pull it up and take a quick peek. Excellent. Let's go to it. Here we go. So we can still use this Jan month. We're using 46, and feel free if you wanted to choose different time frames over here for the option expiration. You've got those here. We're just going to kind of make it a little bit similar here today with what we've got. Now, we do not have a 42. We've got a 42.50. It's a little bit higher. However, we may have one, and we might have a lot of liquidity here on this weekly right here too. So let's click on the weekly, and I'll show this to you. There's your 42 right there. Now, there's a little bit less time. You don't have to carry this as long. In fact, I can knock this down to 10. We're so close. Okay, so I want to just kind of show you both of these on the screen at the same time so you can see these. But here's the 42.50. Some might elect to go for that. It's right at 38. Here's your 42. You're getting a substantially, well, not, okay, it's a lower number. It's 32. And we talked about those percentages. It's about a 32%, some will say like a 32% chance of it dipping below there, just an estimate, 32% estimate. But as they're saying, this is a higher estimate, even though there's more time, there's just a higher number, like a 38% chance here. What are the differences as you compare these? There's your 38 right there. So this is not quite. Now, we did see some support around 42. And here we go. We've got some up top here at 42. We do not have any open interest here. How are the spreads? Pretty good. Still pretty good. And if you come down here, there's your 42.50. Okay. There is quite a bit of open interest there. Now, keep in mind too, as long as the option market is open, you can try to close out that option at any time too. So if, let's say, it goes up for 2 weeks, goes sideways for 2 weeks, there is the theta, and the theta here is the time decay. And that time decay, it's really nice. When you're selling options, that time decay is 7 days a week. So that includes the weekends. We had a holiday last week. There was time decay over Thanksgiving for people that had sold those options short, right? They were collecting that over that time frame, just generally speaking, right? I just say this, that there is a impact of theta 7 days a week. All right, so I'm going to do this. I'm going to go up just a little bit higher. We're just going to do a single contract. If you're doing paper money trades, feel free to go ahead and do that 42. I just thought I'd highlight it. We'll go ahead and choose the one that does have open interest. This might be a brand new contract, so maybe there could be some coming in there. But I'm just going to go ahead and do this 42.50. It's not quite at 42. It's a little bit higher. But then again, we said, some people might be okay, maybe purchasing shares of stock lower as well. But there's your 42.50. I realize that's kind of somewhat tight, but you've got some support there with that trend line break. So we'll go ahead and do this. Let's put that on right now. There is your 42.50 out to Jan. I'm going to click on it right there. I'm just going to move this up just for fun and just see if I can get a little bit more. It's a paper money account. So I'm going to get the feel, but it's just something that some traders might do to try to get a little bit more before they put the trade on. No guarantee, obviously, you're going to get filled, and there's less of a guarantee because you're trying to capture more income from it, right? And just a quick note, remember we capture our total income when the price of that option, when we get our max gain, when this option, this short put goes to zero, right? Because we're on the sell side. Right? Totally different if we were buying puts where you want the price of the stock to go down and you want the price of the put to go higher. This is just the opposite. So as this works itself lower, remember that theta, which is a negative number, works in our favor as long as the price of the stock is holding above that 42.50. So just as a quick reminder here. So how would this work out in our favor? How are we looking to potentially collect our max gain over here? Or at least over time. Well, the price of the stock is about 43.50, so it can go down a bit, maybe $1 to the downside without getting near that strike price. It can go sideways over this range as much as it wants. And really, our anticipation, maybe the way that we looked at it is maybe there's a possibility of, with that trend line break and BKR showing strength, that the whole industry might move up and it might go higher. The whole idea is we're just looking for it. In this case, as we're selling those puts, at least from one perspective, it's just to hold above that 42.50 by expiration, if in fact we're trying to collect our max gain. So do you see how you can generate potential income from the market by the price of the stock with everything we discussed, the liquidity of options, etc., holding above a strike price by expiration? What did we say? 3 directions it can go. That's appealing to a lot of investors, right? But you got to be willing to understand and keep eyes on this too, because if it does go below that 42.50 and there is an assignment, well, then we'd be very, very likely to be owning shares. And then we talked about the possibility of a covered call over there too. So let's go ahead and just continue where we left off at there. So I'm going to go ahead and hit confirm. Let's take a look at our order confirmation dialog. And you can see up top here that there we go. Our max profit is exactly what we mentioned. We're just doing that single contract, 131. The multiplier, you can see it is in effect. The multiplier there is 100. So we times that by 100, 131 at expiration, less any commissions or whatnot. There is the max loss. We said that's if the assignment occurs and Schlumberger goes to zero, the price of the stock. So if the company goes were to go bankrupt or whatever the case might be, it goes to zero. That's what you're seeing right there with that max loss, to put that in proper context. And the buying power effect, your margin requirement is a lot less than our first trade. Notice it's a lot less expensive stock. We're still only doing one contract, but relative to Pan W, which was up getting darn close to 400 actually, we're quite a bit lower than that. And you can see right there, we're under $1,000 on that margin requirement. So let's go ahead and hit send, and we'll send it on through. Okay, there are 2 under our belt. Let's go ahead and hit another one with the time we have remaining. Let's pull up another couple of stocks. Now, here is one that's moving today. By the way, a lot of the semiconductors were showing some strength as we went through this. Okay, and there is MRVL. Now, one of the things that I have to rewind and mention to you, because we jumped into a lot of different things, but the one thing we did point out is I started off initially saying that, with literally one moving average, you can get some interesting indications on this. That moving average I wanted to bring up to your attention real quick is the 10-period moving average. Let me just put this on the chart right now. A lot of times there can be a lot of price action that occurs underneath that 10-period moving average when prices break above. Do you guys see the trend here? What happened when we broke above? I'll choose yellow instead. There's your 10-period, you're breaking above after the flag, right? The possibility of the flag formation. We didn't know. You broke above it at an interesting point right there. That wasn't much really of a flag, but it went, it bounced off the bottom, but this is more of a flag up top here. We are just barely trading above that right now. So will that flag and go higher? That's the 10-period moving average. I wanted to bring this point up because you can see when prices start to break above here, there is a lot of sometimes timely price action. And what are we talking about here? Options, and options have that time element. So that can be interesting. Traders might use these just for individual stocks, but getting those three ways the stock price can move could be interesting. So that was it there. Let's just go ahead and show it to you on SLB as well that we chose. Okay, just barely getting above it right there too. I think we're maybe slightly below it a little bit, but we're really kind of holding that line as well. BKR, there you go as well. But you can see once you get above there, there can be a lot of price action. It's a very interesting way to kind of track this on the S&P 500. I'm going to talk a little bit more about this on Friday in my Think Scripting class, and I'll show you guys, if you're interested, how you can set up the scan. We just don't have time today, unfortunately, but I can show you how to set up a scan where you can look for shorter-term moving averages. In other words, the price of the stock breaking above here on the S&P 500, for example. So keep that in mind. Okay, now let's move on over, because I did mention I had another one over here. That is MRVL, clearly above the 10-period moving average. And when it's doing that, the next thing we can look at is the trend. The trend is higher highs and higher lows. The reason why I threw this one out here, a couple of different things. First of all, there is earnings. I'm going to double check on this. This may be after hours, although we did gap up. Let's see. Oh, hang on one second. Sorry, I got to click. And then if you point to it, it'll tell you. Yeah, it's after hours. And by the way, that is actually tomorrow, not today. So it's after hours tomorrow. So some traders might want to wait for an earnings event, especially if there's a lot of speculation and a big move that could occur. There was a fairly sizable move on that last gap. Okay, I mean, this is a technology company. Oh, it's got its name in there. Marvell Technologies. Sometimes you get big moves around those earnings announcements. So sometimes traders will wait to get that out of the way and then look to maybe sell a covered call, create a covered call by selling the call, or sell a short put as well. So a couple of different things that could be done. There is 100 up there. Maybe it marches up to 100 and test that for a little while. Some traders might say, hey, I'm fine selling a put down here. I wanted to throw this one out here because it's before earnings, and that's one to keep an eye on. Here's one also. The semiconductors have really been moving quite a bit today. Trading above the 10-period moving average again. This is Zscaler. Remember we talked about this? Resistance and resistance right there. It can above the 200, big round number. Sometimes stocks will hold support at those levels. But again, we've got an earnings announcement. This could be an interesting one to kind of take a look at as we head into earnings for this company. In fact, that looks to be today, though. I think it is. One of them was today. This has got to be the one. All right, let's just click down here, point to it, after hours today. So you can take a look at this and see, yeah, maybe if earnings, post earnings, it holds that support level. Could be an interesting paper trade, for example, right? Right through there. And will that support hold? That's what we're looking at there. And that's kind of a longer term level of support. All right, everybody. Well, there are a few out there, and I was just tracking the trend and prices getting above the 10-period moving average, kind of in line with the price pattern as well. Okay, last one here, ALB has been down for a while, but has since begun to turn the direction. A big lithium producer here, an ALB, Albemarle, post earnings right there, but tied in also with price patterns. And again, I did send this out. I mentioned it just for you guys here. So simple, so easy to do. Just smash that subscribe button. Love to have you on board. And I'd really appreciate it too. If you did like today's presentation, you got something useful out of it, smash that, hit that like button. Would appreciate it. That does literally help force the YouTube algorithm to keep this kind of content coming up more frequently. But really enjoyed being with you all today, and I look forward to future discussions with you all. See you next time, all.